In today's video, we're going to look at some Omaha real estate trends, where the market has been and where the market's going, what you need to know if you're thinking about buying a home in today's market. And we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. Let's look at the monthly active listings inventory. And you can see a breakdown for green is 2020, 2022 is in teal, 2022 is in red, and 2023 is in black. As we entered before the pandemic, you can see that in 2020, we had about just over 1,700 homes on the market. And then as you can see, as we hit March of that year, then listings decreased. Okay, and then the same thing happened in 2021. All during 2021, listings were very low. We were below 1,250 homes on the market. And then you can see in red in 2022, we started out real low in January, but then as you know, towards the end of the year, that's when interest rates spiked. So that's where we see this spike in October of 2022. And then you can see it went down as we went into December. And then starting in 2023, you can see in black that inventory has increased. And you can see that we're 13.1% more homes on the active market in terms of inventory. Okay, this next graph shows from 2020 to 2023 year-to-date active listings inventory, and this is existing versus new construction. So you can see during those pandemic years, new construction went down in inventory, but look at existing did the same thing. In fact, it went down even a little bit more, and then it increased and then went down, where even existing during 2022 was below new construction. And then as you can see, it's went up since then. And then if you look at the combined, that's in black, where you can see how low active listings went in January of 2021. And then you can see how it's increased since then. This next graph shows the absorption rate year to date for price ranges. And you can see how in overall, that's this gray line here, we have less than 2 months of inventory on the market. And you can see in these lower price ranges, 100, 100 to 200, and 200 to 300, these lines down here, they're all very low in terms of months of inventory. So that's where we've had a very competitive market. And then as you can see in the upper end market, in January of 2022, we were below 2 months of inventory, but then as you can see how that inventory has increased and how it's taken longer for those upper end home prices to sell. This graph right here is year-to-date monthly average new listings by price range. And you can see that the bulk of those new listings, 26.4%, are in that $200,000 to $300,000 price point. And then what's kind of interesting is you can look at the below 100, how little that market exists. And then the other thing that's interesting is how the $500,000 price point, how much that has increased. 21% of the market is $500,000 and above. Okay, this graph right here shows seasonality, and it's monthly new listings. How many new listings are being added to the market? And you can see how we have an overall trend where in the wintertime, there's fewer listings out there, and in the springtime, it ramps back up, peaks in the summer, and then tapers back off again in the fall. And you can see that all 3 years have done similar paths in terms of the graph. And you can see right here, we're similar to where we were all 3 years. All right, this next graph is monthly pending contracts. What's interesting is you look at 2020 in green, you can see how before the lockdowns, here's where we were, and then right during that month of March when everything was crazy, it went down, but then it took back off in May, and then you see that overall trend. We had, it shows more homes were sold during that time compared to 2022, 2021, and 2023. Now, in 2023, we can see that we have fewer homes being sold compared to years past. Where we were over 1,500 homes for the month of August, we were down 11% compared to 2022, but that's still significantly further lower than 2020. And that's just people locked into those lower rates. All right, this graph right here shows year-to-date average and median days on market. And you can see that before the pandemic, back in 2020, average days on market was 30 days on the market. And then what happened during the pandemic when the market was so crazy? Look at these low average days on market and look at the median days on market where it was less than 3 days on the market. And then what happened was last winter, it peaked a little bit because rates went up, kind of shocked the system a little bit. And then what happened? This next spring, it decreased again. But this is the average and median days on market. Median is in yellow. All right, this next graph is showing monthly closed transactions. And look at how, we start off in January, fewer homes are being sold, then it ramps back up. In the summer, it peaks, and then it tapers back off in the fall. And you can see that we're 21.3% fewer homes being sold in August of 2023 compared to 2022. But that's even lower than the pandemic years of 2020 and 2021. And this is just another way of looking at that graph. Year-to-date August closed transactions, where in 2021 we had over 10,000 homes sold during that first part of the year, and then how we're off 19% compared to 2022. So fewer homes are being sold. And this is for the Omaha area year-to-date August closed transaction by price range. And you can see the bulk of those homes being sold are between that $200,000 and $400,000 price point. Okay, this is looking at new construction, existing in terms of volume. As prices increase, volume of course increases. So you can see that in 2020, you can see the blue is in new construction and the green is existing, and then the gray is combined. And you can see how we sold more homes new construction wise. And this is year to date, looking at from January to August of each year. And you can see how in 2022 we were up 24% in terms of volume of new construction, and now we're just off of that. But we're still, compared to 2023 versus 2020, we're still significantly higher, and that's just because prices have gone up. And then if you look at the combined total, if you look at 2023 versus 2022, we're off 14%, but we're still way better in terms of, you can see where those prices have gone up compared to 2020. So it's pretty interesting. Okay, this graph right here shows a breakdown of average percent of list price received. And you can see that how in 2020, in January of 2020, you can see that we didn't have the bidding wars, but then you can see in red and in blue in 2021 and 2022 during those May or April of those years how 104% of homes were selling well over list price. And then you can see that even in August, which is 2023, homes were still selling at list price. So in the Omaha market, it's still a very competitive market. All right, this graph right here shows, just for the month of August, average and median sale price for existing and new construction. And look at the median sale price for existing homes back in 2020. That was $220,000. Now it's up to $290,000. And then look at new construction. The median new construction price back in 2020 was $337,000, and now it's $458,000. So, and then you have the average and the median, the difference there. But interesting to see how prices have increased. This just shows that prices month to month go up and down, so don't necessarily pay too much attention, to month fluctuations. You can see that the combined existing and new construction, you can see where new construction, where it varies month to month, and then this is existing, obviously lower than new construction, and this is combined. Okay, this graph right here, it goes back 20 years, and you can see that this is average new and active listings. Okay, so you can see that every month in red is new listings coming onto the market, but then you can see the existing inventory in black. And look back in the years of the Great Recession. That's why it's so much different now compared to the Great Recession. The amount of inventory we had back then, we had over 6,000 homes on the market. back in 2007, 2008. And then you can see this little interesting dip. In 2009, right here, we had that $8,000 tax credit. So what that did was that spiked up the market and fewer homes, more homes were sold during that time. But then you can see once that tax credit was over, it went back up and then it slowly decreased in terms of active listings on the market. But what you can see here is after the Great Recession, we had that run of interest rates where they were below 5%. And you can see where those low interest rates took away that inventory. And then you can see the pandemic years, you can see where existing inventory was even below new construction. So when rates got down to that 2%, 2 to 3% range. So that's what you see there. But that's the monthly average new listings and inventory. But you can see every month in the Omaha area, we're adding somewhere 1,400 homes on the market, new homes coming on the market. Okay, this chart is really interesting. This is a 20-year annual closed transactions. So you might hear people, well, no, homes aren't selling right now. Well, last year we had 13,000 transactions closed in 2022. Now compare that back to 2003 when we had 10,000 closed transactions. Now look at the years of the Great Recession. You can see where we got below 10,000 homes sold during that year. This is the pandemic years where we had that spike in activity, but you can see we're not far off compared to the years pre-pandemic. So even though sales are off, this is kind of an anomaly right here where we had that many homes sell, but we're not far off from where we were in 2019, 2018. So homes are still being sold out there. All right, this graph right here shows combined residential average and median sale price. The median sale price is in blue, the average sale price is in green. But look back in 2003, the median sale price was $129,000. And then you can see how that chugged along until 2013, and then what happened? Prices just shot right up. And then you can see in 2020 how prices went up substantially just in the past few years. Okay, this is new construction average and median sale price. And you can see that after the Great Recession, prices took a little bit of a hit on new construction, but then they steadily climbed since then. And right now, the average sale price for a new construction home is $484,928. The median sale price is $445,701. So compare that to when new construction back in the early 2000s was just over $200,000. So it's amazing to see that growth. All right, this graph is interesting because this is a 20-year new construction sales. And you can see in the years before the Great Recession how we were selling really close to 2,000 sales. And then you can see what happens in 2008, 2009, those years there, new construction really took a hit. And then starting in 2013, it's gone up since then. I don't know what this little hiccup here at 2017 was, but you can see in 2022, we're back up to where the number of new construction sales, new homes are still selling even though rates have gone up. Okay, this graph right here shows the historic 30-year fixed rate mortgage rate. And you can see back in 30 years ago, it was really common to have an 8% interest rate. And then rates got even higher back in 95. All during that time, rates were high. People were still buying homes. And then you can see how rates got down. And I remember when rates got down to 6%, that was like fantastic. And then when rates got below 6%, it was like, wow, that was really cheap money. But look at 2009, when we were getting out of the Great Recession, look what they did with the fixed rate mortgage rates in order to stimulate housing. Look how rates went down to where it was very common. It was, people got kind of spoiled with those low interest rates. And look at the pandemic years, how rates went down. And then that wasn't going to last forever. And then we had all those number of sales. And then look what's happened now in 2023. Rates have gone up to where they're now back at 7%. This is just kind of interesting, a different way of looking at that mortgage rate by decade. And you can see in the 70s how, it was where mortgage rates, where they entered the decade and where the decade ended. In the 1970s, are 7%. In the 80s, They started the decade 7.48, ended the decade at 9.78. Then you can see in the 90s, started the decade over 10% and ended it at 8%. And then in the 2000, and then look at 2010 where we started and then where it ended, 3.72. In 2020, we started the decade at 3.72. Where are we going to end? Who knows? This is looking at prices from the onset of COVID, first quarter of 2020 to the second quarter of 2023. And you can see where, you have some of these dark blue states where they had 54% increase in Idaho. Arizona had a 51% increase in home prices, and Florida 52%. And then you have Nebraska at 36.2%. So interesting looking at how much prices have gone up since the 2020. Now look at annual apartment construction is at a 40-year high. And look at how after the Great Recession, they weren't building that many apartments. Even when you drive around Omaha, you can see the number of apartment complex going up is crazy. And I think what that's saying is people see that affordability is out there. People aren't going to be able to afford a home, so there's going to be more apartments being built. So it's just kind of interesting to look at this graph here. And this is national, of course. This graph right here shows home value and mortgage debt. You can see how much equity people have in their homes compared to the value of the homes versus what they owe on it. And it's just amazing to see how the value has increased. Now, as values dropped nationally, yes, but there's still substantial equity there. All right, looking at this graph, it's going to reflect on affordability. Look at how the monthly mortgage payment to buy at the prevailing mortgage interest rate. After 2009, when rates went below 6%, look how affordable homes were for a buyer. And then look what happened since then. In 2020, it was around $1,000, but look now, it's over $2,000. That mortgage payment has doubled since 2020. So affordability is a real challenge right now. Now, what they're trying to do is get a hold of inflation, and you can see that they've raised the interest rates, and you can see how that is their goal is to keep it at 2%. You can see how inflation spiked here. It was above 8%, but now it's on its way down. Again, that's what they're trying to do is get a hold of inflation. This graph right here is the national median home price. And you can see how in the year 2000, it was below $150,000. And then you can see prices went up and then prices came back down during the Great Recession. And then in 2013, we've been steadily growing since then. And again, we spiked and then it came back down again and it just went up a little bit. This graph right here is new construction sales. And you can see how they spiked during July of 2020 and they've came back down and now they're back at those pre-pandemic levels, and that's nationally. Now this graph is interesting. This is showing distressed property sales. Okay, and then look at back in 2009. We got to a point where almost 50% of the sales were distressed sales, foreclosures and that sort of thing. But look at since then, since 2013, look how the number of distressed sales has come down. And even though not right now, we're so low in terms of distress, there's no foreclosures out there, that sort of thing. Because people, if they get in trouble, they have so much equity, they can just put their home on the active market and sell it. But you might hear in the news that, distressed properties increasing compared to there was none out there, and now if there's one, that's 100% increase. So pay attention to that, but there's no, a run of foreclosures coming onto the market. So if you hear that, that's not true. Okay, this is just talking about population growth in Douglas and Sarpy County. Look at how in the past 20 years, Douglas County has grown 23%. But look at Sarpy County, they're up 48%. Now, for comparison, the population in the United States grew at about 15%, and that population in Nebraska grew at the same time at about a little bit below the national average at 13.2%. The Omaha area is definitely growing.